Welcome to the Imperium Forex Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to begin today's webinar, the Australian dollar is still coasting, or should I say on the back burner, as the US dollar was slightly weaker overnight and at the moment is still contained by the 76.70 to 77 cents resistance, and also if you look, the 60-day moving average, and you can see over a period of time it has worked quite well in terms of the bearish and bullish implications. If we go back a little bit further, you can see the bulls broke to the upside, the bears came in here, and with bears broke down here and the bullish case remained here. So over a year this indicator has worked relatively well. Overall, I do expect to see the market eventually break down and look towards 76.25 to 75.70, with the implications from the technicals also slightly on the softer side. But it would seem that the dollar was a little bit weaker overnight. Now euro pushes through 118.60 and looks towards 119.05 to 119.40.55. From a dollar perspective, though, it hasn't broken down because it's still maintaining above 92.55 and currently trading at the moment at 92.88 after printing a low of 92.87. So we're on the lows, but the outlook for euro, I'm wondering now if it can continue on since we got a break. This could give us opportunity to short above 119 if we don't see any follow on in the next 12 hours. I'll be looking back for a move to 118.35. It's interesting to see that dollar yen has rallied further overnight and now close to 113.60 objective without the strength of the US dollar. So with yen weakening, actually now looks towards this level. For those that are long, I would raise stops in case we get a sharp rejection that we saw back here in early December with the doji and then the heavy candle. We could easily see that pattern be repeated. So do be on your guard if you're trading from a long side in case we get a rejection from 113.60. Well, the pound hasn't gone anywhere, and surprisingly, it didn't even respond to the speech Mark Carney gave, the Bank of England governor. He did, however, refrain from speaking on monetary policy, so the pound didn't really go anywhere. I'm still bearish, and I still expect to see a move down to 132.60. Any advances above 134 is still an opportunity to sell. You can see from the indicators that we are promoting a move. The target, first of all, at 133.30. The gold outlook is still bullish and still looks up towards 68.76 after 7 consecutive days. The market rose $6 overnight. Now I do expect to see up towards 76 to probably draw in some profit taking, so just be on your guard in case we get a rejection from there. Support on the day comes in at 12.61. And to round up with oil and silver, well, oil didn't really produce much of a bullish move, but it did capture that 58 handle. Now we do need to see further upside movement. Until we get a break above 59, then I'm still bearish down towards 57 to 56. And wrapping up with silver, still bullish and looking towards $16.25. A break above there could even give scope up towards around $16.40 to 60. The reason why I don't really have a strong target is the fact is that the market may see one more blow off to the upside. So just be careful that if you are short, not too short, should I say, I still see demand coming through. So that wraps up for today. Thank you very much for joining me, and I hope you have a wonderful day ahead.